Good evening, everyone. So, basically, this video is basically all about calculating risk. All right, all about calculating risk. Risk. All right, I can say risk management or money management. All right, anyone. So basically, um, now, uh, people always complicate. What loss size should I use? Um, should I use one standard lot size? Should I use 0.5? Should I use a one standard lot size because I have a 1K account? Should I use 0.01 because I want to be scaling small, all this kind of stuff? Like, they're always, like, they don't have that specific lot size they want to use. They don't know how much they are risking. They don't know the outcome of their deposit. Like, they don't know what to expect when they are, like, when it's pay out. Like, let's say if you are putting in 1K into the market today now, at least that your 1K, you should be able to tell that, okay, this my 1,000 naira now can turn to 5,000 naira by the time I'm trying to withdraw. You should already like plan your whole process down. Do you understand? Alright, so I'm going to explain something for you. And this thing, the thing is mostly, especially in our analysis, we can even have the whole thing all planned out that okay, we're going to follow this risk. But by the time we are starting to do our analysis, it starts seeing otherwise. Alright, so now let's look at it in this perspective. Now, this is how you can risk. Risk wisely and without fear. Now, there's something called the 10 trade rule. Alright, there's something called the 10 trade rule. Alright, the 10 trade rule. Alright, now this 10 trade rule, that's to say now that any starting capital or your starting equity is a pro firm, alright, you have to split your risk into 10 positions, because it's a saying that a strategy now you don't really need to be 100% have a 100% accuracy for it to be profitable. Even with a 40% win rate, you can be profitable. With a 40% win rate, a 50% win rate, you can be profitable. With 40%, you can be profitable. Now, this is the proof of that. Alright. Now, imagine now that you have a $1,000 equity to run a trade on. Now, this your $1,000 equity now. You split it into 10. Alright, that is to say your risk now is 10% of this. Do you understand? So now your risk is 10% of this guy. That is basically $100 per trade. If you want to go very, very conservative, you can now follow there's something called a 20 trade rule. Do you understand? That is now you are going like you are breaking it down a bit to become very conservative on your system. But it is proving that the 10 trade rule has worked over time for proving strategies. Do you understand? Like that works. You understand? So because there's no how you want to take 10 trades in a row and you want to lose the 10, then there's something wrong in your system if that's the case. So now we're risking $100 per trade, which is fine. So by the time we have take up to 10 trades, it will determine our fate of this our portfolio. Right? It will determine our fate of this our portfolio here. So now let's imagine now worst case scenario, because this is all about risk. So let's just talk about the reality here, because most people are losing in the market. So now let's talk about worst case scenario. Let's say on your first trade now, you took a loss minus $100. On your second trade, you took a loss minus $100. On your third trade, even till let's say for your third to your fifth trade, you'll be taking a loss. Alright, you'll be taking a loss. Now you are downwards $500. Now, as you are down $500 now, on your let's say, in fact, on your sixth trade, on your sixth trade, you are down $600. Let's use this worst case scenarios. Now imagine losing 6 trades in a row. Normally you should start reversing your strategy, you understand? But that same thing you are doing that you are confident enough that made you lose up to these 6 points, keep repeating that process. That's why you have to have an edge in the market before you do this. Do you understand? You have to have an edge when you start trading a live account. Because now let's just say for example now, even on your 7th trade now, you are down $100 again. Now altogether now you have already lost $700. Do you know that your remaining 3 trades now, if you trust the process, your remaining 3 trades will actually bounce you back to profit? This is how, because definitely you know that on average we are targeting a risk to reward of at least 1 to 3 to 4 risk to reward. Like me personally, I always go for the 1 to 4 risk to reward ratio based on my system. Alright, so basically anytime I'm risking $100 in the market, I'm expecting a $400 return back. Alright, so now that is to say now that if I should just win 3 of those trades, or let's use the traditional 1 to 3 risk to reward ratio. So now if I'm risking $100, I'm getting $300 back. So now let's say if I now win those 3 trades back, imagine here I'm down $700 from 7 trades. Now just winning only 3 trades, that's my 8th trade and 9th trade and 10th trade. Alright, imagine now I'm winning because these trades, they happen at random. Do you understand? They happen at random. So let's say here I'm winning that's $400 plus $400. Alright, on the 1 to let's use the 1 to 3. That's $300. Alright, $300. So imagine now, just 3 trades, you've already gotten back these losses. Because this is 900 and you were just down 700 there. So at the end of the trading session, you will have a net profit of $200. That's this your 900. Alright, 900 plus this your 900 minus this 700. Alright, you now have your net money plus your equity. You now see that your balance will now still be at $1,200 at the end of it. Taking like, you just have to trust the process. There is no how, except like you have a strategy that is not like pushing well for you. Do you understand? But if you have an edge in the market, there is no how that you actually stick to this rule and it will not make sense. Let's say if you have issues with your confidence or something now, if you've lost 5 trades in a row, the best thing I will advise you to do, you cannot but it's still like you are not trusting the process, but you're not playing it safe. That if you know that you don't have an hedge, you understand, you are suspecting that then this is my code. There are sometimes you know, okay, it is my strategy. But before you should jump on the live market, I believe that you should have an edge in the market, because I don't know where you don't want to come in and gamble. Do you understand? So you want to just, on the 5th one now, you will now split your risk again. This is a very conservative approach. If you are risking 10% previously, once you've taken 5 losses in a row, you have to split your risk so that you have, because the thing is all about protecting capital to go again. So this time around now, let's say on your 5th trade you are down $500. So once you are there now, that $500 now, you have to now start it again. So it's not basically like you are starting again. So this time around, you're not trying to grow 500. This is like, you get. So you just have to follow that process. Like you have to follow that. Just trust the process. If you have an edge, I would prefer you go through this route. Now this is the way to look on TradingView. Now, so there's a misconception that some of you guys get in the market now. Alright, now let's say you have an analysis, something like this. Let's say you have an analysis like this now, and now you come to the market. Alright, you see that because people misuse this risk to reward tool a lot. Alright, they're always focusing on the pip count. You understand? So now let's say this was a point of interest, right, that you were expecting the market to come to, and now let's say when market now hits this point of interest, now the market has started dumping from there, and initially you were supposed to sell from here. You see some people now that they'll start saying I no go fit enter again. That is when the market is already in this kind of region. Alright, when the market is already in this kind of region, when it's already weak like this, you don't say, I no go fit enter this drawdown again. No. It go take me out. But your analysis predicted that when market spikes this level and dumps, you're expecting a short. Now the market has already touched there. Why don't you enter? It is those kind of people you know that they do not understand risk, because they are focused on pip counts and catching entries rather than making money from the trade itself. If the market has already gone and you came to the market and you met the market at this price point and you said that when it gets here it should reject here, now this is a confirmation. The 1 hour rejects the 1 hour left shoulder here. That's a nice confirmation to short. You can open your short position here, you cover this thing because you don't expect market to come and revisit that point again. Then you use the risk to roll like this. This is your 1 to 3. Most of the time you tend to see that it aligns with your plan. Now you will now look at this stop loss here. Don't be thinking about how big the stop loss is. Focus on the risk to reward. Now if this way you now apply on, if you had that 1k account, for example, now the example I just gave, let's say if you have a 1k account, now if you want to risk $100 here, you go to your MT5, you calculate your lot size. So you know that in this place, no matter the dollar that you expect inside here, it's only $100 you are ready to risk for this thing. And if this thing is coming down here, it is giving you always, if you're on my network, you will see that I'm always talking about 3x, 4x, 2x, 3x. This is how I'm getting it. This is what it is. If you look at it here, this is risk to reward ratio. You see this 3.08. That means this setup now is expected to give me a 3x reward. So if I'm risking $100 here, I'm expecting a $300 profit here. And if I'm losing just 1x of my account. That's 10x. That's the 10% I'm risking. Do you understand? So now, if you now come to the market at this point, let's say it is right now that you are seeing the market moving. Since that was your analysis, you can still jump on the market here. But this time around, you are only expecting a 2 arrow return from here, because your analysis is still valid. That's just the truth. It is not reversing from here. Me personally, I didn't forecast that the market will reverse from here. So I still believe it will still come down. So I can still scaling the market from these zones. But these things, you want to do them where you are finding level of resistance, because you will not, as in once the market has already gone, you won't know exactly where it's going to turn off from again. So you just have to mark out level of other blocks, since the market follows other flows a lot. So once market's approaching levels like this, you start thinking of scaling in. Don't think about the stop loss, how big the stop loss is. Just calculate your risk accordingly and risk wisely. Do you understand? So that's why you see me talking about 2x, or you can almost set your this thing like this. Now you put it in compact status mode, so it will be showing like this, so that you will not be scared of your this. That's how most people don't know how to trade gold too. They're always scared of trading gold, taking entries on gold, because they will say like the stop loss is big. Yeah, it's not about the stop loss. Focus on the risk to reward. Okay, now look at this gold setup. Now the market was bearish, right? Lower low and lower high, lower low and lower high. I kind of miss this though. Lower low and lower high. Now we broke structure here, then we broke structure further. Now this was a break of structure. This was the initial pullback, right? So market first of all tested the breaker, then this was now induced again. Then now market came for the left shoulder here. I can put in that this is the left shoulder. If you check the 15 minutes to the 30 minutes time frame, you can see that there. So this is the left shoulder, this is the head, then this is that pattern. All right, now this is the entry now. But some people now would not want to risk once they see this rejection. What are you scared of? You don't have to be scared. You can risk from here alone, safe. As because if you are seeing that spike of that level, you're saying, okay, well, good, then look for your 1 to 3 risk to reward ratio from here, just like that, and just risk it. Put it's the same $100 you risk here, just like your lot size will now be fluctuating, because you're calculating, you're not having a fixed lot size. Do you understand? You're not having any fixed lot size per trade. You are just like calculating. You understand? So that's just basically it. All right. So anyway, like, so you don't start missing on your setups. You don't start missing. You always know when to scale in. And that time when you're always feeling scared, that's even the best time to jump in. The only time you are scared is when you're not calculating your risk. That's the truth. Because you don't expect the same expect you don't expect to use, let's say if you're using one lot size to catch the entry from here, definitely you'd have had a tighter stop, like a 50 pip stop loss. Now if you're catching the entry from here, let's say this is a very unrealistic risk to reward though, but if you're catching the entry from here now, for example, all right, you will not expect to meet the market here. I want to use the exact same stop loss. They used to cover that same loss size. You can't use the exact same loss size from there. It's not going to work. Do you understand? It's not going to work because you will now be exposing yourself to much risk. Because how can you enter one lot here, then you came back to the market and meet the market here, because you're not seeing the market pushing up already? Like you are seeing something like this, yeah? You are seeing something like this. You are seeing something like this. You will now be entering that same one lot again. Like, are you not considering the drawdown? But you entering here now, because like this is how you can use signals, especially those of you that are always liking to use signals. You be like, the signal don't go, I don't go feel enter. Who told you cannot enter? You don't know how to calculate your risk. The same risk you're paying to risk there before you put it here, at least so that the wave does not leave you. If you believe in the setup, you risk it. Do you understand? So that is just basically how to apply risk. Same thing goes here. If you are looking to sell now, let's say you're looking to sell around this level now. All right, let's say you're looking to sell around this level now. How would you have cut this short now? If you expected that, okay, this market is going to dump when it gets to this zone here. All right, if you expected it's going to dump when it gets to that zone, you can calculate your risk to reward already. You can expect that, okay, if I'm risking $300 here or $100, $300 here, we expect to get like $900 back. If I'm risking $500, I expect to get like 1.5k. You understand? Like it is all about your risk, how you approach the risk. Like, because you don't really have to catch the full move. Because it is now this compound interest now, all this three arrow. Imagine you're having a series of TRO, because these things, they happen at random. That's the truth. Because let's say your first trade now, you can be down one arrow. All right, your first trade you can be down one arrow. Your second trade you can be lucky, you have three arrow. All right, it's not even low, but it's strategy. Your next trade you can be down one arrow. You can be down one arrow. All right, you can be down, like it can be a series. The next thing you have a win. All right, but in this series of events, after 10 trades, if your strategy is actually solid, bro, there is no how you won't end up in profit. Last your balance will not just grow. You just be stuck on that 1k. Last I don't know if you understand. So it's this compound interest. This is how me I personally see risk. All right, this is how I personally see risk. All right, so especially for those of you, like now on my network now, I always post my trades mostly before and after, before I take them and I read them. Now if you see me, I post a setup now that it was there, then by the time you got to the market, you saw the setup has already moved up to this point. You now start seeing it has already gone. I know if you enter and you see that maybe me I was targeting somewhere here, then why can't you enter? You can enter from here, just that your own risk to reward. I mean, now I'm locking in a 7x based on early entry. You cannot lock in a 7x with me. You only lock in a 2.9x. You can still enter. Even if you made it here, you can conduct your lower time frame analysis. You can find your own stop loss and cover this zone, or just risk it. The only time you are scared is when you don't trust the analysis and when you don't have an edge. That's just the reality. Right? So that's my own take on risk to reward, and I hope this makes sense. And the funny thing, that is even for the time you have the worst trades. Do you understand? Imagine following the plan and you're having a losing streak. Let's say you're down 7 trades. Because at least your strategy should show up for you at least 3 times now. Sure. Do you understand? Now imagine you're in a winning streak. Times whereby you are seeing like out of 10 trades, you're winning like 5. Out of 10 trades, you're winning 5. You're winning 6. Imagine. I don't know if you get, like, imagine you're having multiple 3 arrows. Alright, imagine you're having 3 arrows, like in a series of trades. like 4 trades now, then let's say um you took like one loss here. Let's say you took one loss here, you took one loss here. Alright, you took one loss minus one arrow, you took another loss minus one arrow too. Then you had another 3 arrow. Like, just imagine you following the process. But one thing we should be always aware in trading as a trader is our downside. So that's why I emphasize more on the upside aspect, on the downside aspect, whereby we experience drawdowns of 7 losses in a row. Do you understand? 7 losses in a row. Just 3 good trades will bounce you back. And your strategy, whatever you are trading, if you are trading head and shoulders, anything you are trading, support and resistance, Quasimodo, smart money concepts, anything you are trading, at least whatever you are doing, in a series of 10 trades, you should be at least be able to provide at least 3 good trades out of that for you. At least in worst case scenario, you don't want to lose 10 trades in a row and you think that you know what you are doing. Alright, so that's my own take on it. So I hope you enjoyed the video, guys.